JB Cycles here with an update on November the 17th. So previous week we did get a pullback, and my expectation was we should get another upswing, at least one more, to make possibly a double top. And I think my 4-week cycle has shifted into a new configuration here in black, and actually I have calculated it, although I do not have that much data yet. But this new black cycle is the new 4-week cycle, and now we cannot see the 2-week oscillation in this one, but maybe it will be more visible in the coming cycles. It's also possible that we could snap back to the old green cycle, so we have to have an open mind, but at the moment it is the black one. And going back one cycle offset, we see at this point in the cycle we had a low that would correspond to on Monday, and then some kind of upside the rest of the week. Going back two cycle offsets, we see we mostly went sideways, and here we had a pop up and then a deep pullback. So I would say not much help there. From this view, I would not be very confident that we could make a double top here. The cycle suggests we just go down into, well, the rest of November. So we have to be careful, but we'll have to. I will go into shorter term to see how that looks. But longer term, let's zoom out, because I am kind of bearish longer term. Here we have the 28-year cycle in red, and we also have a 56-year cycle. It's a 56-year cycle in wars and interest rates and inflation. And you see, in this 28-year cycle, every other cycle is either a war cycle or a financial crisis cycle. And this current one is a war cycle. But then we do have some anomalous cycles, or I should say only one, and that one was the Second World War. That was supposed to be a financial crisis cycle. However, the financial crisis came early in the 1930s, and then the war that should have been in the 1970s resulted in the Second World War. And then in the 1970s we did have financial trouble, we did have some wars, stagflation, but it really wasn't that of a big crisis, either war or financial. Then we had the big financial crisis in 2008, and now we are in a war cycle. And these war cycles, they tend to top out early in the 28-year cycle, around the time where we are now. Also, you should notice this trend channel. This is the S&P adjusted for inflation, and the older data is based on the Dow Jones Industrial, and we are at the top of the channel. So here I'm comparing with the 1970s 28-year cycle in red, and you see that cycle topped what would correspond to October this year. And now we are in November, we should not make higher highs. But we have to see about that, because if we switch to the 3.5-year cycle, we are now entering the intermediate yellow stage, where anything can happen and the bull market could be over at any time. But normally we see the bull market continues somewhat longer. But if we go back to 2007 and year 2000, the bull market was pretty much over. So here I'm zooming in with the cycle, and as you see, the cycle is now going sideways into May next year. But anytime we could break down. Now, I had a scenario, or two scenarios, for a short bull market, an A, B, C bull market here in blue. And I did some pattern recognition on this last C move, where it could be consist of a smaller A, B, C. And I have marked this point here where my pattern recognition kicked in. and it gave me two scenarios, that this last move would either be this short green one, suggesting a top around August, but that did not materialize. And then the other one, that this last move would be a smaller ABC, even a smaller ABC like this dark blue one. So that's the red scenario, and it should suggest a bull market top around just right after the election. So it's very possible that we had that this was the bull market high, and we should now enter a bear market. However, it's also possible we could make a top around February, March. We have to see what kind of a correction that materializes now the next coming weeks and months. Because shorter term we have a cycle, a dominant cycle of 17 weeks, and this green cycle is actually not based on market data. It's the gravitational tidal effect of the inner planets and Jupiter measured from the sun. And we see the market tops out typically where this inverted green cycle has a top, and it suggested a top where we are now. So anytime we could break down. And looking, zooming in on the wavelets in daily data, so we did get a pullback to the previous top and to the 20-day moving average. So this could be a nice point for making a higher low and a bigger topping formation. However, the wavelets are not looking easy to interpret. Anything could happen here. But still, I would say what I'm seeing here favors some kind of a double top. It could even be a little bit later. There could be another upswing left here. But I would not rule out that we just crash down here. So we have to be very careful, as the cycle showed. We are at the very end here. Anytime we could break down. Don't trust that we get another final upswing here. Looking at the hourly data, I drew this. I said this looked like a 2-week oscillation low. We should make a top here. And I drew this red general scenario that I thought we should get a pullback and then another upswing. So, this low on Friday, that looks like a 2-week oscillation low. It could also be on Monday, but that should be, it's on the level of the previous top. So I would expect upside for the rest of this coming week to make a possible double top. And then we have to see if we crash down or if there's even another upswing coming here. So I'm expecting a bigger topping formation here, but we have to be careful because we are pushing it. We are soon getting kind of on overtime for the next correction. But there's a problem, I should say, for bears, and that's the seasonal variation. This is not the time where you normally would expect any big correction. Because, starting around mid-December, we have a very bullish seasonal expectation. Mid-December into mid-January is normally very bullish. But it can fail. I just love it when it fails, because I hate that seasonal variation. It's so easy. Just go long mid-December and you have a guaranteed success on your long position. It's not supposed to be that easy, but it is a very high probability. So if we do not crash down here in December, January, it is very possible we make a higher high around February, March. But overall, in this period, that's the topping period of this bull market, and then at any moment we can break down here and start this new bear market that I'm expecting. So let's see, can we make another upswing and a double top in this coming week? See ya!